Now, I'm of course just generalizing here, but whenever I see ETFs, high income ETFs that offer yields, let's say 30, 40, 50, 80, 90, 100% or more, most of the time, even though these ETFs offer exposure to a very extremely volatile underlying and pay crazy amounts of income, the price decay, the total return does not make up for the losses. Now, this has a lot to do with the underlying, the strategy, and of course, what happens in the market on any given time frame. But in today's video, we're going to be going over a brand new ultra high yielding ETF that I honestly am considering adding some of to my portfolio. Now, this is simply because I'm underexposed to what this ETF offers as far as underlying goes, but along with that, the ETF provider is one of my favorites across the entire market. And of course, the fact that this ETF offers massive ultra high yield is sort of a bonus. All to say that if you guys want to see which ETF I'm talking about, then definitely stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. So the brand new ETF that I'm talking about is EHY. This is brought to us by abbvie ETFs. As you guys probably already know, one of my favorite providers across all providers when it comes to dividend or high income investing. abbvie ETFs is the provider of Devo, QDVO, abbvie, and many others that I've held in my portfolios for several years now. Now, there's honestly just a few main reasons this ETF caught my eyes, and that's because for one, abbvie ETFs, anything that they come out with, I at least want to look into. For two, the fact that this ETF offers Ethereum exposure, which I honestly am underexposed. I do have some Bitcoin exposure through BTCI or abbvie and other names in my portfolio, but Ethereum, I don't really have much exposure to at all. Now, along with that, this ETF has a max income strategy, which, spoiler alert, we're talking 50 to 80% annualized option premium. But let's go through this ETF, understand how it works, and then again, see if or if not, it might be a good potential candidate. So first, before digging into the fact sheet, the objective and strategy. The abbvie Ethereum Max Income Covered Call ETF seeks to maximize current income through a covered call strategy tied to the investment exposure to the price return of Ether. EHY seeks 50 to 80% annualized option premium income while offering Ether upside potential. By using weekly covered call option writing techniques, EHY seeks to harness Ether's price volatility, which Ether is pretty volatile, transforming it into valuable income opportunities. Now, it then says this fund does not invest directly into Ether. The annualized option premium may be significantly higher or lower than the stated range. Beyond the first 5 to 10% increase each week, the fund would not participate in the upside. So because this ETF literally has max income in its name, what are a few things we're thinking so far? I'm thinking this ETF is probably going to be selling very close to at the money covered calls, which tied to the fact that Ethereum or Ether is very volatile, there is going to be the potential for a maximum amount of income, especially if they're selling calls 4 times per month. But let's dig a little bit deeper into the ETF and learn how it works, and again, how they're going to be seeking a ton of massive income. So a few things first off, the ETF was just launched a few days ago in early October, and I think it's important that we understand a few key facts about Ether, especially if you're sort of a crypto casual like myself and don't really partake in too much cryptocurrency trading or buying or holding. It says Ether is a leading digital asset with real utility, the essential fuel that powers the Ethereum blockchain, the world's most widely used platform for decentralized applications and smart contracts. Ether cryptocurrency is required to transact on the Ethereum blockchain. Every transaction, contract execution, and innovation on Ethereum is made possible by Ether. Ether has enticing growth potential due to its status as a utility token needed to use the Ethereum network, and an investment asset with scarcity value and upside potential. So surely Ethereum, Ether is very popular. Like I said, for whatever reason, I'm underexposed to it. I wouldn't mind having some exposure to Ethereum and what it offers in my personal long-term portfolio, although I would never go all in on something like this because it doesn't match what I'm looking for. I mean, heck, even in the last year, I've added a lot more Bitcoin exposure because of all these cover call style high income ETFs that have came about in the market. But the real interesting part about this ETF and how it's going to seek 50 to 80% annual premium income is how the weekly call construction is going to work. It first says buy long exposure to Ether through Ethereum, exchange traded products or ETPs, and options. Number 2, sell weekly calls on all of the portfolio. So that's very important here. This is what I was saying earlier. This ETF, in order to seek this high of annual premium income, just like I guessed it, they're not really going to seek all that much upside, although they are selling 5 to 10% of the money to maximize income and still provide 5 to 10% Ether upside potentially weekly. So the cool thing about being an investor these days is there's so many different ETFs that even offer the same underlying, that even offer a similar strategy. But let's say one ETF offers much more upside and some income, and some ETFs offer much less upside and tons of income. For me personally, when it comes to Bitcoin exposure, Ethereum exposure, I'd probably go for something that does offer a lot higher annual premium income, especially while there's still massive volatility around these sort of assets. But moving on, it says roll on a weekly basis, replace expiring covered call options with new ones to roll to help generate ongoing option premiums. EHY seeks to pay monthly distributions that include targeted option income premiums. I wish this ETF so badly did not pay monthly. I wish it paid weekly, because I have to be honest, especially with ETFs like this one that do offer exposure to a very volatile underlying like Ethereum, which has been pretty volatile at least as of recent, I personally would rather get paid more frequently just to have more of a read on what's happening as far as the ETF's premium income and everything else goes. So now that we know exactly how EHY, the new Amplify ETF's Ethereum max income covered call ETF works, what it has to offer, what it's going to potentially pay us per year. Of course, this is just an anticipated annualized option premium amounts. I lastly want to share if or if not I would add it to my portfolio. And the answer to that is I would actually add some of this to my portfolio in a very, very small amount. This would probably be in the same category as some of the other ETFs, the high income, the riskier ETFs that I add maybe $5, $10 per day every single day the market's open, just sort of as a lottery ticket. I would never probably build up a massive position of EHY in my portfolio. Not saying that that's right or wrong, but just because Ethereum is still pretty volatile and because this ETF is new, I want to see how it plays out, what the actual monthly distributions look like. Even though I would add some of it, I'm probably going to hold out at least for now. But most importantly, before I go, I do have a question for you guys down below. When it comes to EHY or max income generation with any cryptocurrency, I want to know some of the top names across the market I should look into next. Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like in it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.